The jobs report is out. What is the market telling me? This is the Nick Rutherford report, and every investor loses money. But what separates the best investors from everyone else is, well, they make more than they lose. And the way they do it is looking at the data in the market, and we're going to do that. So hit that like button, subscribe to this channel, leave me a comment, share this with someone who would get a lot out of it, because this is the place to be for the financial news that matters for your net worth. Let's get to it. Wall Street is always trying to take advantage of people. So that's why you see articles like this where it says university inflation expectations soar to the highest level since 2008. And if I look at the graphs here, it's soaring. Yes, we could look at this graph right here. But, well, the price of oil is not spiking yet. So people think there's going to be inflation, but is there really going to be inflation? The market isn't telling me that yet. But if oil starts soaring, then it will be telling me that. And this, I think, is just another idea from Wall Street trying to keep investors off balance so that they can steal your money. Now, some other things that I think are important to bring up before we get to the jobs report here is that I'm always watching the trends, because if I understand where the trends are going, that allows me to be a super investor and make better investments than everyone else. And Wall Street jobs are at risk because of this agentic AI. And I don't know if you've been using AI at all or you think it's overhyped, but let me tell you, it really speeds up a lot of work that I do. And I can imagine that it's going to speed up work that other people do as more and more repetitive tasks become completely automated. And what does this mean? It means if an investor can understand what sort of companies will benefit from these automations, well, that is going to result in people losing their jobs and all of that money going directly to the bottom line of companies. And this is why I can sleep like a baby at night while I build my fortune investing in things that are taking advantage of AI. And everyone knows what they are. Data centers and more chips. Those are the biggest of all the biggest things if you think about it. Now, it may not turn out exactly how we want, but it's very obvious to me that this trend is intact. So I'm just watching for things like this, because if this is a bubble, well, a bubble can go on for much longer than you can possibly think. But when I'm seeing articles like this just means to me that psychologically, well, the trend is still intact. So I'm watching what other people are watching, because as an investor, you're not just investing off the fundamentals, you're investing off of everyone's perception of the fundamentals. Now, the next thing I really want to get to is the jobs report, because we have a huge divergence here. So there's this thing called the SOM rule, and everyone knows that there are many commentators out there calling for a recession, and this has been one of the most reliable indicators in the past. And it's telling us we should be in a recession, but guess what? We're not in a recession yet. Now, maybe there are parts of the economy that are not doing as well, and obviously the lower-end consumer is struggling with inflation, but big tech, the AI revolution, the digital transformation, these places are still growing their earnings massively. And all we have to do is look at the data, and the data is going to tell me exactly what to do. Well, the jobs report came out today, and I consider this one of the most important pieces of macroeconomic data when I'm analyzing the U.S. stock market. And so goes the U.S. stock market, so goes the world. Now, the title here is Scorching Hot December Jobs Unexpectedly Adds a Massive 250,000 Jobs. Now, I don't really care if there's going to be some sort of revision later or it gets weaker, because people are trading off this information and they're going to completely forget about it later. So we're going to just look at this information. Here is the direct data from the unemployment release just a few hours ago. It shows that the unemployment rate, where'd it go? It's right in here. 4.1%. So it's ticked down, not up. And down is a good thing. That means that more people are unemployed. more people are employed. There are not more people getting unemployed, which is the most important factor, because when everyone's employed, they've got money, they're buying things, and corporate profits can go up when people are buying things. So zooming into the most important data is this. This is the initial claims index to labor force growth. And I've got this graph from George Robertson on Twitter, and you can see that blue is good, red is bad, and white is somewhere in the middle. And right now we are bluish. So until this turns white and then starts to turn red, I'm not worried at all. In fact, the initial claims here is at a 200. And if I study the past to predict the future, well, if I look at the past recessions, it really has to tick up 20, 40% from here. So right now, I'm not nervous at all. But if this goes up 20%, if this goes up 40%, then I'm going to be freaking out. But right now, the data is telling me everything is great. And that really is the trick here. You need to understand the data, and then you can predict what's going to happen in the market. So right now, the data is telling me everything is great. Everyone else, well, they're just trying to sell some sort of click or get you to freak out or do something to take advantage of you as an investor. So looking at the chart, it looks like we're rolling into a slight correction here, which is good news for anyone who wants to investigate what things to buy. And the trend here is fully intact. Like, we're going to have to drop a lot, and the data is going to have to change for me to get worried. Now, if I look at some of the other things going on here, Bitcoin, it's way up. And if you look at the chart, typically it goes way up, then it consolidates sideways in a slightly downtrend, and then something causes it to jump up again, at least until the bull market is over. But what's always happening with Bitcoin is it halves, it goes way up, and then it crashes. And we're in the phase, if history is any guide, where things go way up. How long will it last? I have absolutely no idea. But if I study the past cycles to predict the future cycles, there's no guarantee. But if I'm studying them, it looks like we have a lot more room to run. We'll have to see what actually happens. But until the facts change, I'm going to remain bullish. Now, if I look at gold, gold is consolidating sideways. It looks like it may even break up higher, which is very interesting. In fact, gold has outperformed every other major asset, I'm just talking about big ones, stocks, real estate, bonds, except Bitcoin. So I'm seriously watching this, and I'm seriously considering adding more, especially considering how stocks are at some of their highest valuations ever. And I'm not saying that because I think anyone should dump their stocks or buy their stocks. I'm just saying that because I'm watching the data and I'm very, very cautious. But until the underpinnings of the economic situation changes, like the employment market, I'm not worried at all. And I'm going to take my cues from the market. And here we have the biggest trend of all mother trends of everything. I don't even know how to describe it. It's so big, but this is exciting. Nvidia is consolidating sideways. It's not even really rolling over like the S&P yet. Now, of course, things could change next week, but it's looking pretty good to me in this consolidation phase. Of course, if new data comes out, well, my mind is open and flexible to change. But right now, I'm maintaining my bullish trend, my bullish statement, whatever you want to say, that's where I'm at. I'm bullish because the economic data for the unemployment just came out, and everything looks great to me. Next week, we could have some new, different data that causes me to freak out. But right now, anyone who's looking at the jobs data and then calling for a recession, well, they're not looking at the jobs data. That's it. And if you want to get a copy of all of my macro predictions, a deep dive into the market and look at the data that I'm looking at and where we think the market is going, you can get a copy of that at highreturnlowrisk.com. It's linked in the description. Until next time, I'll see you there. So hit that like button, subscribe to this channel, leave me a comment. I'm just letting the market tell me what to do. And I'm maintaining my bullishness so I can easily relax by the pool here What comes next for the markets? Follow me, click on my bio, and click on the link in there to go to highreturnslowrisk.com and get a copy of my latest macro report where we do a deep dive into all the data to uncover what the market's going to do next.